Hi everyone, just another little video with an adjustment here, and it's accounting for VAT, which sometimes comes up in a company account question. Last one time it came up actually was the recent Leaving Cert in 2024, and basically what's happening here in a question is that VAT might be omitted from the accounts, and so I'm just going to do a little example here. Like, what could happen is a company has bought or built a new warehouse. So you'd have maybe the warehouse here, and the warehouse could be roughly worth 180,000, we'll say. All right, and in the question they might say a new warehouse was purchased or built during the year, and this was 180,000, and they might kind of add this then as well, plus VAT at 13.5%. Okay, 13.5%. And they might say the total amount was entered into the land and buildings, all right, but no entry being made in the VAT account whatsoever. So what's really happening here is the VAT element of it hasn't been treated correctly at all. Okay, now what you need to do is, first of all, the first step you need to do is find out what the VAT actually is. All right, so that means step one. So work out the VAT element. All right, so work out VAT element. Okay, and it's quite easy. All right, so in this case here, this will be see where we have 180,000 plus VAT at 13.5%. This 180,000 doesn't have the VAT included into it. So what you need to do is just get 13.5% of the VAT. So therefore, it'll be 180,000 by 13.5%. So that will work out. Let's do it nice and quickly here. 180,000 by 0.135. So you'll end up with a VAT of 24,300. Okay. Now that's your VAT. That's your VAT element there. All right. And step two, then you can work, once you have worked out the VAT element, right, you can adjust your accounts then. So adjust the accounts. Okay. Now, the thing that's happened here then as well, right, is we're going to have to adjust. The common one here is land and buildings, because the total amount is being probably paid over to the supplier, the vendor, whoever it is. All right. So the two accounts that you need are the VAT account. Okay. And a land and buildings account then as well. All right. Now I'm just picking these figures off the top of my head. This is not a question or anything like that. Okay. So I'm going to say that the VAT, we'll say, from trial balance, and I had a VAT maybe 2,500. 2,500. All right, that's from the trial balance. Okay, and I might say my land and buildings could be something like 650,000. Right. So, like, if I was looking at trial balance, are the figures I'm getting. All right. So to adjust the VAT, what's happened here is you have to remove the VAT from the land and buildings actually. All right. This is an asset account now. Remember. So, but of course, this has to be, if you're adding any buildings or anything like that, you're going to have to take the VAT off it, because, of course, this, technically speaking, is maybe treated as a VAT on purchases. And, of course, VAT on purchases can be claimed, all right? But that means any asset has to be without the VAT, all right, net of VAT. So what you do is, we've worked out what our VAT element is, right? It was 24,300. So what you'll do is you'll credit the land and buildings account, right, of the VAT, of the whole amount, 24,300. So you're removing the VAT element from the asset basically. So you'll credit that, then you'll debit your VAT account. All right. So I'm just going to land and buildings, and the same amount, 24,300. Okay. And there you go. That's how you treat it. Now, obviously, if a company is registered for VAT, they can claim VAT on purchases, right? And they'll charge their customers VAT. So that's what's kind of happening here. What what's kind of happened to the VAT account here is originally it was a liability account, but now, of course, with the VAT that can be claimed for the new building, it turns into an asset account if you eventually balance this up. But that's actually how you treat or how you account for VAT in the accounts, and that little adjustment there. All right.